Hello, this is Patrick. Welcome to Chart Built Wealth, Profitable Investing with Technical Analysis. I wanted to get this out to you tonight. Um, it's about 11 o'clock Pacific time. I'm out west this evening, but I just want to cover my current buy recommendations and the S&P 500 briefly. So let's get into it. So I talked about before the election, which was a trip. Uh, Before the election, I talked about the long-term picture of the S&P 500. This was on Monday, I believe, on the 4th that I sent the last update out on. And on the S&P, I said, the long-term chart, which I'm not showing here, it's a monthly chart that goes back like 20 years. And it shows like a 5-year negative divergence that suggests that at some point we're going to have a pretty darn big correction, maybe on the magnitude of 2007 or 2000, but whatever that is, I don't see that right now. So, well, when I look at the intermediate term chart, a 3-year chart like the one I'm showing you, which is a weekly chart, each one of these bars reflects a week of price action. You can see we have a negative divergence here, even on the weekly chart going back to March. So this suggests a pretty good sized pullback is coming also. And you can see our bullish channel here. We're overbought. We're exceeding the resistance line. So, I'm sure this is election related and people propping up the market for all different reasons. And anyway, as market technicians, we don't care about that, but this is flashing a caution sign. Beware, a change of trend is coming. And so when I identify that, I will let you know. But currently, um, it looks like we may see prices push a little bit higher here. I also talked about going into the election, the oversold condition of the market, and that on a short-term basis, a bounce was likely. And given the election and some euphoria that might happen after the election, which it did today, we get some sort of a bounce, and that's what we got. This is what it looked like Monday night, and here's where we are now. So we've had a nice big bounce. So do we get more here? I don't know, but again, I'm not making a call on the overall market here. I don't have any ultra bearish reversal pattern right now that would tell me to be short. I don't have an ultra bullish sign, even though I think the market will push higher here for a few days. And with that, here's my buy recommendations. They're still intact. The uh, platinum, physical platinum ETF, PPLT, buy rating was established here back in October, early October, with a stop of 87. That's still intact. So what was I doing this morning when prices were way down? I don't know, 3, 4%. I was buying. Why? Because the risk here was minimal, given that my stop is, let's call it 87.50. When prices were at 89, my risk was very minimal, and the potential reward based on the smaller pattern was 104. And oops. So the reward to risk was very favorable. So I was a buyer. Next chart, copper. This is the same. You know, uh, Suggested buying copper back here in early 2024 at approximately 25. The price projection based on the triangle here was 31.50. It got to I don't know, 31 or so, and I went to a neutral rating up here, and then I went back to a buy. I got stopped out with a small loss, and then I initiated a buy again here back in September. So we had a big selling day today. Copper was down 4 or 5%. So what was I doing? I was buying copper today. I currently have no stop on this position because it's so volatile. But today I added to my position. I always buy on red and I sell on green. So that's where we're at. I'm going to be paying close attention to copper, the ETF CPER, and China. Got a buying opportunity in China today. So while our stock market was up 2%, 2.5%, was I chasing technology stocks? No, I was buying things that were down. I was buying copper. I was buying platinum. I was buying China. So I think China was down 2.5% today. This is a weekly chart, but gave us a good opportunity to add some money back into China. And so that's what I did. My stop is at 30. So again, the reward to risk looks pretty favorable. Uh, 10 Cent Holdings. This is a recent buy rating that I put out. It's a Chinese technology conglomerate, and this big symmetrical triangle, I mean, ascending triangle, flat top, ascending support line, has a price projection at 81. It broke out, and when it came back down and retested that breakout around 53, I initiated with a buy rating. It jumped up. I was on the call saying you should be selling some into the strength. Always sell on green. And now we've gotten a pullback right back to where we purchased. So it was down 2% today, 2.5%. So what was I doing? I was adding while people were chasing technology and all that nonsense, things that are already up. I do own some NVIDIA. I was actually selling today. Um, and if it's down tomorrow, I'll buy some back. But the recommendation isn't NVIDIA. NVIDIA's upside is much more limited compared to 10 Cent Holdings and some of the ones that I'm showing you right now. So TCEHY, I got a buy with a stop at 50. The reward to risk is enormous. Alibaba, BABA, initiated with a buy down here back in September, skyrocketed. It was, I guess, the biggest up day in stock market history. I don't know. Maybe I don't have that right, but it was big. It was up 20% in one day or something. The Chinese market, Shanghai index, Baba, of course, participated. So I was on the call saying sell, sell, sell some, and now I'm buying all that back. So again, a lot of upside here. Marathon Oil, energy stocks. Been bullish on energy stocks. They've been testing my patience. Again, we got a 1, 2, 3 year symmetrical triangle support line, resistance line, and then we've also had another consolidation once it broke out. And back a week or so ago, when prices were way down at 26 or so, I was saying it's a great buying opportunity. I'd be adding to these stocks. And we had a big week last week. We got a big week going on this week. And Marathon Oil looks good. We got a 41.50 price projection, and our stop's down at 25. So again, this is, I think it was up 4% today or something, much bigger than tech stocks. So again, Marathon Oil, I still like it. Be careful chasing it now. Again, I sell on green. I sold a little bit today. If it's down tomorrow, I'll buy that back again. And that's how uh, I think you can lower your cost basis and increase your percentage of your return. XLE, the other an energy ETF, the Select Spider fund is having a big week of 6.25% this week. It was up over 4% today, or close to 4% today. And you have a big ascending triangle with the flat resistance line and the upward resistance support line. I'm sorry. And our stop is down at 86. You can see we're up close to 94. The price projection here is 115. So the suggestion was to buy, sell, and buy but sell some on this big up move. And we got our stop at 86. So again, when you get a big up day like today, up 4%, you want to sell a little bit. I don't know, depends on how many shares, what your risk tolerance is, what your expectations are. So that is the scoop on XLE, the Energy Spider ETF. Gold miners, they had again, they were down today. Again, they were down last week. They're down again this week. And again, I'm just touching that right now. You know, this has less upside than some of the others that I'm showing you, but still, we got a price projection of about 50, and we're currently at about 38. So again, it's getting more attractive. My stop is down at 36. If we get stopped out, we still got a gain, so we've got a gain locked in, and so it's getting more attractive. So I've been adding back on the gold miners ETF. REITs got stopped out. A national retail NNN was a symbol, and American Homes for Rent AMH. But the broader index ETF IYR is still intact barely. It really can't be down much at all from here, getting hurt from interest rates rising at a very high clip, especially today. And so if prices are down even minimally, I will be stopped out tomorrow, but it's down less than 1% from our stop, so I'm still holding on to that. And our stop is at 97. So the upside is 112. So again, I think that this isn't one of the biggest reward to risk, the best reward to risk scenarios, but it's still good. So again, when it's up, I'm buying, I'm selling, and when it's down, I'm nibbling at that, and that's what I've been doing. I actually took the money from the other two REIT ETFs and added most of that into IYR. The biotech, the NASDAQ biotech ETF, IBB, suggested that back in September. Here we have an ascending triangle again with a price projection of 173. And last week when I was on, I was saying I'd be buying here when we were down around 140. We got our stop at 137 approximately, well, 137. And so our reward to risk is very favorable. And so it's having a nice week. It's not outperforming the market by very much, but again, the reward to risk is attractive, and I'm still suggesting IBB. Thank you for watching Chart Built Wealth, Profitable Investing with Technical Analysis. Please like and subscribe. I think the recommendations have been solid. Hope you have a great week, and take care. Good trading tomorrow. Adios.